Hey everyone, welcome back to Corporate Decoder, the place where we make sense of all the confusing corporate jargon so you don't have to. Today we are diving deep into Clearfield Incorporated's 10K report, and let me tell you there are some juicy bits in here about their finances and future plans, especially after spinning off a business. Alright, so first off, let's get a sense of Clearfield Incorporated's standing. As of the 31st of March 2025, their public stock alone was worth over $347 million. That is a significant chunk of change, and gives us a good starting point for understanding their overall value. Joining us today to break down this 10K filing is our analyst team who will help us navigate the numbers. Before we get started, check out our Discord channel, linked in the description below for more in-depth discussions and exclusive content. Clearfield is a company that designs, manufactures, and distributes fiber optic products. These products are essential for building out internet networks right to people's homes and businesses. They serve various types of customers like big national phone companies, smaller community broadband providers, and international clients. Now, it looks like they operate in one main segment after selling off their Nesta Cables business in November 2025, which is now being reported as a discontinued operation. This sale is pretty significant, and we will touch upon its financial impact later. Let us jump straight into the most important part, the financials. For the year ending the 30th of September 2025, Clearfield saw its net sales jump by a healthy 20%. That is an increase of over $24 million compared to the previous year. This growth is attributed to increased demand across their core markets. Specifically, their MSO or cable television market sales surged by 38%, and the large regional market saw an impressive 58% increase. This suggests that their products are resonating well with these key customer segments. Now, this is where things get really interesting. Their gross profit in 2025 skyrocketed by a whopping 96%. That means their profit before considering operating expenses nearly doubled from about $25 million to over $50 million. This was driven by higher sales volumes, which allowed them to better cover their manufacturing costs and a significant reduction in excess inventory charges. They managed to cut down inventory charges by over $10 million, reflecting better inventory management. On the expense side, selling general and administrative costs went up by about 7%, mostly due to higher wages and performance-based compensation. This increase is pretty standard and seems to be in line with the company's growth. The result of all this is a big turnaround. Clearfield went from a loss of over $19 million in continuing operations in 2024 to a profit of over $2 million in 2025. This is a massive shift and shows the positive impact of increased sales and improved gross margins. If we look at net income, which includes everything after taxes, we see a similar story. They turned a net loss of over $8 million into a net profit of over $6 million. That is a huge improvement from negative 58 cents per S-hair to positive 45 cents per S-hair. Now, about that Nesta Cables business that was sold, it contributed a loss of nearly $4 million in 2025, which is pretty similar to its loss in 2024. But remember, they also recorded a significant impairment charge of over $10 million related to that sale. This means they had to write down the value of the assets they sold because they were worth less than what was on their books. This impairment is a non-cash charge, but it impacts their overall reported loss for the year. Looking at liquidity, Clearfield has a strong cash position. They have over $165 million in cash and investments as of September 2025, which is an increase from the previous year. This provides them with a lot of financial flexibility. They also have a $40 million line of credit available that they have not used. This means they are in a good position to fund their operations, investments, and even their share repurchase program. Speaking of share repurchases, Clearfield bought back over $16 million worth of their own stock in 2025. This is a way for them to return value to shareholders, and can sometimes signal that management believes the stock is undervalued. They still have about $8 million remaining in their authorized repurchase program. Let's dig a bit deeper into their assets. Their inventory levels specifically have decreased by about $14 million from 2024 to 2025, down to around $42 million. This is a positive sign, as it means they are selling through their products more efficiently and not holding on to excess stock. This contributed to better financial results. Their property, plant, and equipment, however, have decreased significantly from almost $16 million in 2024 to about $10 million in 2025. This reduction is likely related to the sale of the Nesta Cables business and potentially some assets being retired or sold off. Now, for stock-based compensation, Clearfield spent around $4.6 million in 2025 on stock-based compensation. This includes options and restricted stock given to employees. This expense is spread out over time and impacts their overall profitability. When it comes to intangible assets, they had customer relationships valued at about $1.8 million as of September 2025. These are valued valuable assets that represent the ongoing business relationships they have with their clients. Looking at their stock options for 2025, they have about 261,000 options outstanding with an average exercise price of over $41. This indicates employees have the potential to benefit from future stock price increases. They also hold nearly $145 million in investments. Most of this is in low-risk US Treasury securities and certificates of deposit. Their strategy seems to be preserving capital while earning a modest return. Looking ahead, they have about $9.3 million in future amortization expenses for their intangible assets. This is a normal cost of doing business when acquiring or developing intellectual property. The sale of Nestor cables is a big story here. The numbers show an operating loss for this segment around $4 million for 2025. Combined with the impairment charges they took, it highlights that this part of the business was not performing as well as the core operations. Selling it appears to be a strategic move to focus on their more profitable segments. On the risk side, Clearfield acknowledges their reliance on a few major customers, specifically distributors, who accounted for a significant portion of their sales and receivables in recent years. Losing even one of these could have a material impact, which is a key risk factor they highlight. They also call out cybersecurity risks as a major concern, acknowledging that cyber attacks are becoming more frequent and sophisticated. While they have implemented security measures and have not experienced material disruptions, yet it remains a constant threat that could impact their business operations, reputation, and financial results. The auditors Deloitte Soy Amp Touch LLP gave them a clean bill of health for their 2025 financial statements and internal controls. They did, however, highlight that estimating inventory reserves requires significant judgment due to factors like product life cycles and sales forecasts. For previous years, Baker Tilly US LLP also issued clean opinions. So what is my take on Clearfield Incorporated? After divesting the underperforming Nestor Cables business, they have significantly improved their financial performance. Their core business is growing, sales are up considerably, and crucially gross profits have nearly doubled due to better operational efficiency and lower inventory write-downs. The company has a solid cash position and is actively returning capital to shareholders through buybacks. The main risks revolve around customer concentration and ongoing cybersecurity threats, which are standard for many businesses today. Their strategy of focusing on fiber to the anywhere solutions appears to be paying off. Clearfield looks like a company on a strong rebound with a clear focus on its most profitable areas. Alright, that is our deep dive into Clearfield's 10. Okay, what are your thoughts on their turnaround and their future prospects? Let us know in the comments below. If you found this analysis valuable, please give this video a thumbs up and subscribe for more unbiased corporate breakdowns. And don't forget to join our Discord community for real-time discussions and more exclusive content. Thanks for watching, and we will see you in the next one.